You're very welcome to this series of pre-scene videos where we'll be taking a look at the May 2018 management case study pre-scene. And this particular pre-scene is based on the fictional company of Menta. And Menta is in the business of public transportation, more specifically, predominantly bus transportation. And what we'll do with this series of videos is we'll take a number of pages in each video from the pre-scene and go through each of the sections in detail, highlighting the key theories that relate to what we're seeing in this particular pre-scene, some industry, real-life industry examples, etc. And we'll talk about what will be likely to come up on exam day based on what has come up in previous case studies. So, starting with the introductory section to the pre-scene, we're told that Menta is a leading multinational public transport group. They employ 35,000 people worldwide, and they operate both local and long-distance bus services in both developed and developing countries. So they were founded in the 1980s in the fictional country of Centralia. We're not told too much about Centralia in this pre-scene other than it's located somewhere in the Eurozone. So we can estimate that it's probably a fairly developed country with consumers that have a high degree of spending power. It's also likely to influence wage costs and other costs associated with the business, where they might be a little bit higher in a developed country than they would be in a developing country. So they have a degree of geographical diversification. That's diversification of risk, the fact that they're not reliant on just one market, that they're reliant on many different markets. And here are the locations where they're present: Central Eurozone, Western International, and Eastern International. So later on we're going to see that Western International relates to the Americas. So you think of the United States as being the big market there. Eastern International, then we're talking about Asian countries. So we'll talk about that in a little bit more detail later in the pre-scene. But the home territory is the Central Eurozone, and that's where Centralia is located. And they are very reliant on their home market of Centralia, which provides 70% of the revenues for Menta. So while I said before that they're geographically diversified, and that's good to see, really that they could be more diversified. The fact that they're present in a wide range of countries does not mean that they're not over-reliant on one market. And it seems to me early on that they're a little bit too reliant on their home market of Centralia, where they're really quite dominant. We'll see later on in the pre-scene that they're the number 2 bus transport group in their home market of Centralia. Of course, the fact that they're dealing with a range of countries means that they're dealing with a range of infrastructures. Because they're a transport group, it means that they're going to be very dependent on what the different governments in these different countries is doing in terms of road and transport infrastructure. So in developing countries, you could suspect that the infrastructures will be altogether less developed too, and that of course will have an impact on the wear and tear that their buses are undergoing, which could well impact obviously their costs and how often they need to replace those key non-current assets, and also it would have an impact on how they depreciate those assets too. They're also dealing with this currency of sea dollars, again a fictional currency relating to the fictional country of Centralia. That will have an effect on their financial statements because they'll be translating foreign currency transactions and foreign currency assets if they've got subsidiaries in other countries, and there are transactions taking place in other currencies, which is likely to be happening, that would have an impact on their financial statements at the end of the year when they're consolidating all of those different subsidiaries. And then in the final paragraph of this introductory section, you're told about your role. You're a financial manager, so you're moving up in the world. You work at the head office in Centralia, and your specific role is associated with the key region, which is the Central Eurozone region where Centralia is located. So you're often liaising with colleagues in other regions, so you're not just dealing with colleagues in the Central Eurozone region. Your primary responsibilities then reside in the management accounting area. Having said that, at management level, you will be expected to confer with a wider range of colleagues than you would have done at the operational level. At operational level, you would be dealing predominantly with finance colleagues, and that has an impact on the way you use the language that you write in your exam, because at operational level, because you're dealing with predominantly financial colleagues, you can use financial jargon and assume that they understand. At the management level, you're very likely to be dealing with colleagues in marketing, in HR, in other functions, and you need to take care with the language you use. You can't assume that they understand what you're talking about when you use financial jargon. You need to unpack those financial terms. You can't assume that they know what they mean, so bear that in mind. And digging down then into what it means to be a financial manager at the management case study. First of all, your role will entail monitoring the implementation of strategy. So, the people higher up the food chain, the CEO, the chief financial officer, the directors of the company, they're likely to be determining the strategy of the company, and the strategy of the company will focus on the longer term and where the company is headed over the long term. They will expect the managers at the mid-level, i.e. you and your managerial colleagues, to actually monitor how that strategy is being implemented. So you'll have to give guidance to people lower down the food chain, and you'll have to make sure that they're executing on the day-to-day tasks and that they're in line with the overall strategy of the company. The actual execution of day-to-day tasks is something you would have done as a finance officer, for example, at the operational case study level. You've moved up now to management level, so it's going to be about monitoring how that execution of strategy takes place. So you're going to be managing finance officers yourself. Related to that is the focus and the time horizon you're dealing with at the management case study level. You're going to take a midterm focus. So you're going to be thinking of beyond a year, out to maybe 3 years or so, when you're dealing with this level. At the operational level, it was more about the day-to-day. Your time horizon was set on maybe 2, 3, 6 months, maximum a year out. At the strategic level then, you're going to be taking a long-term focus, looking at investments and financing for activities that relate to 5 years out into the future. And then at the management level, this level, you're falling between those two. So you're looking at the midterm, 1 to 3 years typically. So you'll be dealing with investments in products and setting their prices, thinking of the midterm. So bear that in mind. You'll be expected to manage risk at this level, and you'll also be expected to deal with longer term financing. How do you finance the different opportunities that are presenting themselves at this level? You'll be looking a little bit more, a little bit further out, as I said before, somewhere between 1 and 3 years typically. So you'll be looking at getting your hands on longer term financing, longer term loans, perhaps issuing shares, that kind of thing. It's going to be important the people and leadership skills you demonstrate, particularly the people skills, they're becoming more and more important as you move up through the levels. Why? Because you'll be expected to influence the decision makers at your company. You'll be speaking to power, and you'll be expected to influence directors, CFOs, maybe even the CEO for this exam. And you need to consider the wider context in which your business is occurring. You'll be expected to consider not just your own business, but the wider business environment, the competitive environment, the different stakeholders that will be interacting with your business. Not just internal stakeholders, but external stakeholders. So the local community, politicians that you might need to lobby, etc. So as we move on, we see that this first main section of the pre-scene deals with regulation and state ownership. So we're not really jumping into the history of this particular company just yet. It's interesting that they're setting the scene in this way, in this particular pre-scene. And it's important, the role that the state plays in this industry. Before it played a very dominant role. Now it plays a more hands-off role. Having said that, it is still a very important player. We'll see later on, for example, that the government actually accounts for a big percentage, either directly or indirectly, of the revenues that Menta is earning. So, many people, we're told, rely on buses and trains for travel. We know that. And an efficient and attractive public transport service actually encourages car owners to leave their cars at home and to take public transport, which reduces road congestion and pollution. We, of course, know environmental concerns have been becoming more and more important in recent years and decades. So the government is a very key player. I spoke about stakeholders before. I would determine them as being high power and high interest for this particular case. You remember Mendelow's matrix and the level of interest and the level of power different stakeholders have. Certainly the government is a key player in this particular case. So it's not a completely free market, I would say, because of the influence that the government has. As I said, the government wears a variety of hats in this pre-scene. It's both a regulator and a customer. It represents the public interest, but it has its own interest, of course, in collecting taxes, corporate taxes from a company like Menta. It's also interested, for example, in the employment opportunities that a company like Menta will create. So we're going to see the government come up again and again throughout this pre-scene. A key player, high power, high interest. And you think of E1, go back to E1, remember that you can be examined on theories from E1, F1 and P1 from the operational level. They won't play a central role at this level, but do refer to them if they are relevant, and we'll be referring to a couple of theories from the operational level throughout this pre-scene. So think back to your E1 studies and the different motives that different organization types have, whether they're private institutions and they're pursuing profits, whether they're NGOs and they don't have a profit motive, but instead they're interested in other opportunities, or whether they're a governmental body and they're looking to serve the public interest above all. And often there are tensions between different organizations and the different motives that they have. And certainly I think that could well be a tension that raises its head throughout the pre-scene and on exam day. Think then of a private business like Menta, where the profit motive is the overwhelming motivation for running the business. The owner and owners of the business, the private business, they want to accrue wealth for their shareholders, versus the government. They're interested in perhaps the 3 E's economy, efficiency and effectiveness, and they want to maximize the benefit for the public at large. So transport is something of a commodity nowadays, and certainly bus transport, it's a little bit unexciting, I would say, and a company like Menta is going to have difficulty in differentiating itself from its rivals. It's seen as something of a commodity, as I said. It's important, having said that, that above all, that the service is reliable and that it's safe, and punctuality is going to be very, very important as well. So they need to get those right. So they need to be efficient, we're told here. In other words, they need to ensure that they have a better conversion of inputs into outputs. And right away in that first paragraph, pollution, that is certainly a potential source of conflict between a private organisation like Menta and the government. The government is pushing for greener sources of energy, and private organisations often are on the receiving end of fines for polluting the environment as they pursue profits at all costs. Watch out for that. And indeed, at the end of this pre-scene, there's an article on some protests taking place because Menta have these old school buses that are said to be polluting the environment. So, many countries, including Centralia, we're told, used a combination of state ownership and regulation to ensure that public transport was efficient and reliable. For many years, most of Centralia's large operators of buses were actually owned by the government. They did aim to make profits, but they also covered unprofitable routes as a public good or a public service. The other way in which bus services were protected, we're told, was through the law, through regulation. And the government would actually grant licenses to certain bus companies for certain routes. And that actually reduced competition greatly between bus operators, making it potentially very profitable for private bus organisations to operate certain routes. So they would each of these private bus operators would compete for the right to win the license to operate a route, and once they got that, they had locked down that route and could ensure that they made profits on that route. However, things changed in the 1980s. There was actually a global shift away from state ownership and regulation as the favoured way of controlling the economy, and the controlling heights of the economy, so to speak, were taken by private institutions. And this didn't just happen in the bus industry or indeed transport as a whole. It happened on a wider scale, and particularly in the United States and the United Kingdom, with Ronald Reagan in the United States and Margaret Thatcher in the United Kingdom. They pushed for a more laissez-faire or private form of ownership and free market capitalism. And that has been underway since the 1980s, right up to the current day almost, although there is a pushback against the forces of globalization and free market forces in recent times, with someone like Donald Trump even coming out and talking of more protectionist economic policies, and that could lead to trade wars. And we're seeing, worryingly, I would say, the effect of those talks. And we saw recently where Donald Trump, for example, enacted tariffs on steel coming into the United States to make more favourable conditions for United States manufacturers of steel. We'll see that play out over the coming months and years. Mainstream economists, of course, are always keen to point to the danger of trade wars and the danger of pulling back from free trade. So we'll see how that plays out. So this shift towards privatization took place in the early 80s, and having said that, even though there was that shift, it's still a heavily regulated industry, public transport. So bus companies are now encouraged, we're told, to operate unpopular routes through government subsidies. So the government is present there. Government is actually an important source of revenue for bus companies right up to the current day, certainly in Centralia. And in that final paragraph of this section, we're told that the 1980s saw the sale of many large state-owned bus companies in Centralia, and that actually released cash to the government that they could use for other purposes, and it let them get on with other activities and let private transport companies and bus operators get on with the business of transporting the public to the destinations that they were longing to go to. So let's just reflect on a useful model from your E2 studies, the pest analysis. So political and legal considerations at this early stage, we could say certainly that the health and safety of passengers is going to be a huge concern for the government in particular, and the passengers themselves, of course, so that a company like Menta needs to pay great attention to that. And we were told, of course, that transporting passengers safely to their destination is one of the chief aims of these companies. Government permission to operate certain routes, we'll see a little bit later that there still are certain licenses being granted by the government to private bus companies, and private bus companies actually fight it out to win the right to get these licenses for certain routes. That's still a factor in this industry. Company law is going to be important, of course, what companies can and cannot do in certain countries. Because Menta is operating in a number of countries, they will face different company laws in different countries. Some will be more lax and some will be stricter, and they'll have to adhere to those strict terms. Tax, of course, is going to differ from one jurisdiction to the next. What are the corporate tax rates? And the transport agencies, presumably Menta will have to interact with a range of transport agencies in different countries. Some transport agencies will play a greater role and some will be a little bit more hands off. Economic factors, because Menta is actually operating in a number of countries, exchange rates might be an important part of this economic consideration. The business cycles, of course, will differ, whether the different economies are booming or whether they're going through economic recessions. That will have an effect on their revenues, for example. Interest rates will be important if the company is carrying a lot of debt. We'll see that when we look at the financial statements. Societal factors then, one can certainly think that there are changing attitudes towards the environment and how it's protected, and that is certainly evident at the end of this pre-scene. As I mentioned before, there's an article there on protesters coming out in Centralia, protesting against the pollution being caused by Menta's old buses, and technology related to environmental protection. Cleaner sources of energy are always coming up, as we see electric vehicles, for example, play a more important role, and driverless technology is mentioned actually specifically in this pre-scene, and that could have a huge impact if it comes to pass, and it certainly looks like driverless technology will come to pass in the next 5-10 years. That would have a huge impact on the costs of a company like Menta. Their salary costs are very, the biggest cost that they have actually, and they could potentially make huge savings as they lay off their bus drivers, for example, if driverless buses become the norm. Then we get to Menta's history. And we see that the company was actually not founded as a bus company. Originally, it was founded in the 1950s as a garage that undertook maintenance and repair of vehicles and buses. It was founded by Andrew Whiteford, and his family still has a huge role to play in the modern conception of Menta, as we will see, because the company remained family owned until the 1980s, when it was inherited by brothers Phil and Robert Whiteford, who were Andrew's nephews. So they actually owned 50% of the company each. Phil was the older brother. He owned a travel agency, and Robert was a trained mechanic. So you would say that they have certainly got complementary skill sets there when it comes to running a bus transport company, with Phil knowing a little bit about the travel industry and having useful contacts in the travel industry, and Robert knowing the mechanics and how to fix up these buses and keep them running. So with a family-run company, which it was until the 1980s, there were certainly pros and cons. Some of the pros would relate to a family-run company typically being able to take a longer-term view. They're not subject to external shareholder pressure, for example, so they can take that long-term view. They're not having to turn profits in the short term. They can endure tougher times if they feel that they're going in the right direction. They can take riskier decisions if they feel they'll benefit the firm in the long term. But some of the cons then related to family-run firms, there would typically be, for a privately run family-owned firm, fewer financing options because they're not able to go to the market to issue shares, for example. Nepotism can creep in, and certainly we should ask at this early stage if the Whitefords are still running the company all these years later, whether they are actually the best candidates to run the company, or whether they were just put in positions of power because they were favoured by their father and their uncle before them, for example. And often as well in family-run firms, conflict can be very bitter indeed. There are few conflicts as bitter and hostile as the ones that can run in families. You see brothers and sisters fighting it out for influence and wealth in these family-run firms if things start to go wrong. So we'll watch out for that as we go through this pre-scene. Any hints of familial strife. So, in 1980, we're told of phase one of the privatisation push by the government. Centralia's government relaxed the need to obtain a route licence for long-distance routes. And long-distance routes are classified as journeys of more than 50 kilometres in duration. So this meant then that the bus operators were actually free to compete with each other on long-distance routes, and actually that caused a lot of chaos initially because you had a load of bus operators piling in, sensing an opportunity, and there were no barriers. The barriers were removed, so it went from a monopoly type situation overnight where there was just one private bus firm winning the right to operate a certain route to a perfectly competitive situation, and that led to chaos because there was no power to dictate prices, monopolistic prices to the public and to capture high profits over the long term, because there was an increase in the supply of bus seats, and of course that pushed down prices because demand would have been more or less the same, and that's economics 101. And because of that then it actually meant that a number of bus companies went bankrupt. They failed. The Whiteford brothers, of course, though, thought that there was an excellent opportunity with this new privatization push. Phil, the older brother who had his own travel agency company, he had a lot of experience organizing coach trips for tourists, and he was used to hiring buses and drivers. And what he did was, with his brother Robert, they purchased 4 second-hand coaches, and that is how they started their bus services company. Phil then, on the other hand, Phil, with his knowledge of the travel business through his travel agency and the contacts that he had there, they proved very useful. And Robert was, through his mechanical know-how, able to keep these second-hand buses running safely and reliably. So with their joint expertise, Menta grew slowly but steadily. And by 1985, they had 30 buses and they were operating 6 intercity routes. So in 1985, we see the second phase of the privatization push by Centralia's government, because they sold all of their bus companies, and also the government changed the law so that any bus operator could service any route without seeking a route license. So this is the second phase. And Menta saw this as a great opportunity, and they purchased many of those publicly owned buses, the buses that were owned by the government, and they established several subsidiaries across their home country of Centralia that offered local bus services in different towns and cities. And they also continued to expand on the long distance routes that they went into initially. So here we see a further easing and lowering of the barriers to entry in this industry. So conditions are becoming more favourable to would-be competitors. So those barriers are being lowered. And just a word on the subsidiaries here for Menta. They have several subsidiaries, and they have many more now, and that of course complicates the business of consolidating financial results, consolidated budgets, etc. And we will see the consolidated financial statements a little bit later on. Menta then competed very aggressively against other competitors, and the way that they did so, and they're still doing so today, was through low prices, cutting their fares. So we think back to Porter's generic strategies. Remember, whether a company is differentiated and they're going for something a little bit more high end, and they're looking to charge higher prices, or they can be a cost leader. And that involves keeping your own costs low and charging lower prices to your customers. And certainly it looks like Menta is positioning itself as a cost leader. Remember, what you don't want to do is to get caught in the middle between a cost leadership approach and a differentiated approach. So they're cutting their fares, and what that means is that they're forcing their prices down, they're forcing other competitors out of business by making routes unprofitable for their competitors. And then Menta was expanding rapidly by acquiring their fallen competitors' buses and their depots and their drivers. And by 1990, they had Menta had 11 intercity routes and 7 local bus companies with a fleet of 450 vehicles and 2,500 staff. So they're rapidly expanding. So it is certainly very important that a company like Menta, with its cost leader strategy, has tight control over its own costs if they are to be profitable. And certainly when we look at the profit and loss statement later on, it does look that Menta is a company with tight control over its costs. So we enter the 1990s then, and Menta, their growth continued throughout the early 1990s with further acquisitions in Centralia, and they incorporated selected elements of newly acquired companies into the Menta group. What they did was, for example, they purchased Northeast Airport for 50 million dollars and sold it 2 years later for 80 million. So a nice profit there, but only after they had actually incorporated all of the bus links between the airport and surrounding towns and the city of Eston in Centralia into its operations. So what we see here in the early 1990s is that Menta has an appetite for taking on a little bit more risk. They're not just relying on the same old trick, the same old bus services. They bought an airport which shows that they're into product development. So they're serving the same market of Centralia here in the early 1990s, but they're actually going into new services. So they bought the airport there as an example of that. And indeed, we see in the paragraph below that they also purchased a tram service near Northeast Airport. Menta Tram was a tram service that they bought, and they rebranded as Menta Tram. So they won that franchise to operate the tram network that serves the city of Eston, transforming it from unpopular and loss-making into a successful service. And later on, they sold that tram company. So what we see is that they have taken risks there with product development by going into new services, and those risks paid off because they made a nice profit on Northeast Airport, and they also turned that tram service into a profitable enterprise and later sold it. So They have an appetite for risk. They have an appetite to acquire companies and be a little bit more aggressive. They're not just growing organically. They're going out there and buying up companies. And when we look at the strategic objectives of the company later on, we'll see that they're still interested in going into new services later on. They talk about acquiring some more tram services again in their strategic objectives later in the pre-scene. And towards the end of this page then, we're told that Menta is actually continuing to expand, but not just into new services, but overseas. So it's been all about Centralia up until now, and here we're told that they started to go overseas. And the company is dominant in Centralia currently and neighbouring countries. So likely exam issues, I certainly think acquisition targets are going to crop up on exam day in some form. So other transport companies, not just bus companies, but other transport companies. And I also think that I wouldn't be surprised to see market opportunities in new markets present themselves on exam day. So this company is open to both new markets and new products. In other words, according to Ansoff, that is diversification. It's potentially the riskiest strategy, but also one that could pay off very handsomely indeed. And it seems to me that Menta has actually got a good track record of taking measured risks and making them pay off, as we saw with the purchase of Northeast Airport and the purchase of the previously unprofitable tram service. The group strategy then, we are told that the aim is to deliver long-term shareholder value. Okay, so we saw earlier on that this was a company that was previously a family-owned company in the 1980s, and there are a few clues throughout this pre-scene that this is a company that is listed on the stock exchange, that it's a publicly traded company, although there is nothing explicit about them being listed on the stock exchange in Centralia, for example. So we need to be a little bit careful about that. And but the mention of certainly shareholders here and delivering shareholder value, that's a pretty typical aim for a publicly listed company. So there's no mention of a vision at any stage throughout this pre-scene. So that is the idea of what the firm could be in the future. Maybe they're a little bit conservative there and they're lacking in aspirational, something in an aspirational quality. But let's take a look at the different elements of the business strategy. So first of all, it's about organic growth, and that is all about providing safe, reliable, customer-centered transport services with an excellent customer experience at a competitive rate. So we know that this company seems to be fixated on keeping costs and keeping prices low for their customers. And that's a pretty conservative approach, the organic growth approach. And it ties in with what you might have seen in E2, incrementalism, which is a certain strategy whereby a company tries to develop with small extensions of past practices. In other words, they want to do more of the same. So nothing too risky so far. The second element of the strategy, though, is a little bit more risky, and it's one that Menta has demonstrated before, which is acquiring businesses, and that is how you would expand more rapidly. So they want to acquire businesses that complement Menta's current operations. They want to acquire businesses in areas where Menta's management has proven expertise. So presumably we're thinking here about transport companies. I would be very surprised if Menta did a 360 and wanted to acquire a business in a completely different industry. So really they're going to be concentrating, I think, on other transport companies, bus companies and tram companies, etc. So what they want with these purchases, these acquisitions, is that they provide a return on capital that exceeds Menta's weighted average cost of capital. We don't have any mention explicitly in the rest of the pre-scene about what that weighted average cost of capital actually is. We do know that the cost of debt that they carry is about 8% though. And finally then, the third element in this strategy relates to bidding for selected tram franchises, government contracts for education or health transport. So they mention explicitly tram services. We know that they had a tram service before and they sold it, so it seems they're interested in purchasing tram franchises again. So certainly I wouldn't be surprised to see that crop up on exam day. And remember what I said before about ANSOF. Product development and diversification. Development is related to new products and services in the same markets, and diversification relates to new products and services in new markets. So they're open to both, it seems. So they're certainly willing to take on a little bit of risk. And thinking about your P2 studies then, and investment appraisal, think about payback versus the accounting rate of return, or a method like the net present value estimation of how good or viable a proposed investment opportunity is. Certainly you could use one of those methods to ascertain on exam day how viable a certain proposed course of action is, or a proposed investment is. Would there be allowances or grants available from the government, for example? And then soft capital rationing versus hard capital rationing when there are investment opportunities available. Perhaps there are internal constraints on the opportunities that the company can actually take up. They're presented, maybe you'll be presented on exam day with 2 or 3 potential opportunities and you can only take one due to a lack of internal funding. Or maybe there are external constraints on funding. Maybe the economy is not going too well, or the stock market is not performing too well, and investors are risk averse and not willing to provide funding for some investments that are being proposed. And then we have an overview of the group. We have the finance operations and sales and marketing functions at head office, and it looks like they're structured functionally. And then underneath we seem to have some kind of a divisional structure where the different divisions seem to be split: Western International, Central Eurozone, and the Eastern International. And what we see is that this company is about 81 operating units spread over these 3 regions. And we've got about 8 operating units in Western International, and we have about exactly 11 in Eastern International, which means that there are 62 operating units in the home territory of the Central Eurozone. And that means that we've got about 77% of their operating units in Central Eurozone. So they're very reliant on the Central Eurozone, and we know that they're very reliant on Centralia. And as we move down through this page as well, we see that the operating units, they report directly to the different regional management teams. And interestingly, there is very little interaction between the operating units. Maybe that is a big lost opportunity. And I say that because it might mean that there are best practices not being shared widely throughout the organization. That can happen with a divisional kind of structure, because each division is very autonomous, and they're each replicating functions that are undertaken by the other regions or divisions. They can kind of be very, very focused on their own area, and they can also be very competitive with other regions as they fight it out for budget and resources and headcount, etc. So they're not likely to be sharing much with the other regions and divisions. So also, of course, with a regional or divisional structure like this, you can have a duplication of tasks. So the finance function, there's a finance function in Western International, there's a finance function in Central Eurozone, there's a finance function in Eastern International, and there'd be a lot of overlap in terms of what they're doing, instead of all of those activities being bundled together at head office, and you would cut down on waste in that way. And there can be a lack of goal congruence as well with a divisional structure like this. Not everyone is pulling in the same directions. You might have Western International with their own goals, and they might be contrary to what the group as a whole is looking to attain, or what Central Eurozone is trying to achieve. I'll tie up this particular video with a look at page 7, as we see that the intercity services, the longer routes, rely on single-decker coaches, and comfort is going to be paramount on these longer routes, of course. And there are comforts such as air conditioning, for example, that come as standard on these services. It's unlikely that customers are likely to put up with uncomfortable, overcrowded, overheated buses on 3 to 4 or 5 hour journeys. With city services, there is a little bit less of an emphasis on high comfort. It's really about just getting passengers from A to B quickly, and ensuring that they're safe, and they use a mix of single and double decker buses for city services, and they want to get as many passengers into these city buses as possible. With the rural services then, finally, they're using single-decker, smaller buses. They're more suitable to the country roads that can be a little bit, they can have fallen into a state of disrepair often, and they're carrying fewer passengers. Typically, we would expect them to be less profitable perhaps, and actually in a lot of these country routes they're relying on government subsidies to win or to make these routes profitable, as we will see a little bit later on.